How's it going, guys? Today is Friday, April 2nd. We're going to take a look at the bigger picture. Where are we going? Where are we headed? What is the location on the chart that we expect support and or resistance? We're going to look at the SPY. We'll look at the QQQ, the IWM, and then I want to get into a trade setup for you guys. Might possibly be a nice trade setup. Let's see how it plays out. First thing I want to do is go over to the website here. I saw a little bit of news that came out, and of course they pop it on us on a Friday when the market's closed. However, we saw some jobs numbers come out. It looked pretty good for the market. First thing I want to look at is the website here. It's FRAD. I'll try to put a link of this in the description of the video. But as you can see up here, you have the pre-pandemic highs of February 2020, and then you have the market crash down here at April 2020. And then, of course, we've been taking off since then. And so this is about where we're at. March 2021, 144,000 as far as total non-farm payrolls. I'm not sure that number is actually updated yet. Well, maybe it has. We'll take a look at that. That's for March, yeah. Second thing I want to look at is this is the initial jobless claims. And of course, this one, as you can see here, this is about what's quote unquote normal. And then back here, you see 2008 financial crisis. Back here, you see .com bubble. And then presently you saw this huge spike for the COVID-19 spike. Now, we all know things that run a little bit fast, a little bit wide. I mean, the entire economy was shut down for a brief period of time, and now we're coming back into the reopening. Something I noticed that's a little bit funny is where we're at on the chart as far as the SPY goes compared to where we're at as far as actual unemployment data. And unemployment data can transition itself back into GDP, and so that's why the market does like to react on that one way or the other. Now I want to take a look at, this is the Cboe equity put to call ratio. We can use this sometimes. We can't always trade with this information, but we can definitely use it to our advantage as far as when you see high numbers up here around like back here on October 30th, 0.77, that's 77 puts for every 100 calls. So this is the contrarian way of looking at it. As far as when we see a high number in the equity put to call ratio, we possibly are looking at market bottoms. When we see, excuse me, when we see lower numbers down here, 0.37, that's 37 puts for every 100 calls. As far as the opposite end of the trade, that's getting a little bit extreme. I would say 30s, 40s, but actually let's go back here to the 3-year chart and you can kind of really see where we're at. So we are already still pretty low, 0.42. That's pretty bullish as far as bullish sentiment in the market. And as you can see right here was the 2020 bottom. This is March 12th. I'm gonna go back to the 1 year again really quick. Two dates I want to look at. I want to look at 8/27, which is right here. This is August 26th, August 27.38 as far as 38 puts for every 100 calls. That's the first one I want to look at. The second one I want to look at is, I believe it's this one right here, which was, here's this other low number, 0.35 puts for every 100 calls, and that's on February 24th. So I want to look at both of those in the chart. So let's go back to the chart here and do this. So this right here is the first one I was talking about, and this is what I mean is sometimes we can use this data. This was the 0.38 puts, and look where it was on the as far as the market. Are we coming into a top? And like I said, you can't trade based on just that information. You have to really use the charts as your best guide. But after this number was put in, which is extremely bullish sentiment in the options trades, going into a high up here, I forget what that was. It was probably around 360. And then as you fast forward here, you can see this one right here was 35 puts for every 100 calls. This is on 224. And back here, you kind of saw the same thing. You saw a slight, after this close up here on that day, you saw a pullback to the market. I believe it was close to 10%. And so that's the thing is you can sometimes use information, but not all the time. So I just wanted to highlight those two things. Let's get rid of this. And we will look at the charts and kind of see what's going on here. Well, and so here's the thing is we've had a pretty bullish week overall. And so what I want to kind of look at is where is this market going? It looks like we broke out an SPY above 398. We took this, we've been taking these trades to the long side coming into Friday, or I'm sorry, coming into Thursday. So we'll see what happens after Thursday, but let's go out to the weekly time frame and kind of see where the charts are at, where they're going. Something I kind of noticed on these charts is the volatility picking up this last about month and a half. which when I go over to the IWM and the QQQ, I'll kind of show you that as far as the volatility that's picking up in here. So absolutely bullish. There's no reason why this thing cannot continue higher. I think a measured move would probably be around 408, and I'm getting a measured move from this chart, this daily chart right here. If I kind of zoom out on this, I'm taking it from this last pivot down here up $26 roughly. So if I take it from this current pivot and I'm bringing it up to $26, that's kind of where I'm getting that number from. But here's the thing with markets that are all-time highs, you can't really say that there's going to be resistance at any number. You can't say that there's going to be resistance. In fact, it makes it really difficult to trade one way or the other because it's hard to buy high and sell higher. If that's your thing, that's great. If that's working for you. For me, I like to do measured moves. I like to try to scout near a support or resistance zone. And unfortunately, at all-time highs, it's really hard to scout like a high that we can either short at or a high that I can trade to as far as if I am to the long side already. So if you are long in the SPY, I would just keep raising your stop loss up, possibly below the low of day, the prior day, or at maybe if there's a gap, maybe the gap window itself. So SPY, we're looking at support of 394.17. Get a pen and paper out if you can. 394.17, strong support. Also, we'll have support at 398.20, 397.40, 396.50. Write those numbers down. Let's go look at the QQQ. QQQ, where are we headed? Let's go out to the weekly time frame first. And there's actually something I wanted to show you guys on the QQQ. This price action where you kind of see it, it's getting really volatile in here. And the question kind of remains right now, if I zoom in a little bit further, and I'm looking at this price action right here. As far as this being a high of 338.19, it dips down. Let's say if we had our move to the downside, we shot down to the downside. Sure, this can be a bear flag. In fact, I would say that it was a bear flag, but now we are breaking out to the upside. The thing is that's not totally a breakout yet. It really has to get above 327.66 to begin, in my opinion, a breakout. And at that point, do you want to take that trade as far as the type of move that it ran from the low of week to the high of week and then coming into tomorrow? I see that the futures are up a little bit based on Friday's price action. The Qs are up, or NQ is up 0.21%. So that's definitely something to watch. Another thing that kind of makes me wonder, is this a down move? This is the correction, and then we're going to see another down move. That is yet to be, well, we don't know if that's going to happen or not. I don't even know the probabilities of that happening. What I would say is take it day by day, week by week. There's enough consolidation in this price action right here to easily take us to the all-time highs if we are bullish, but there's also enough price action in this entire pattern to take us to the downside. So I'm a little bit cautious in the Qs. I do know that we're breaking out. We actually took that breakout trade. So we're closed out of that. Measured move, done and over with. So let's go over to the daily chart before I move on here. Daily chart is looking pretty good as far as where is it at right now based on the NQ. I believe it's pushing up into 327.66. Well, let's take a look here. Here's NQ. This is the breakout that we took, and we already closed out at resistance around 13,298 roughly. So this is where we're at right now. It's not a lot of change from yesterday to today, but there's a little bit of upside in the Qs. So let's take it day by day. We'll see how it goes throughout the week, and you guys will not miss the trade setup. I'm going to go ahead and post that in the Discord. If you're not a member of the Discord, check it out. The link is in the description of the video. Okay, QQQ support 322.80, 319.30, 315.50. And by the way, 322.80 is just minor support. I wouldn't say that it's crazy solid support. Resistance on the triple Qs, we have resistance at 326, 327.70, and we also have resistance at 331. So be mindful of all of those zones. Let's go down to the IWM. Oh, actually, before I get off of the Qs, I faked you guys out. Something I want to take a look at. Let's look at the weekly chart really quick. Back to the weekly. Okay. Something I thought was a little bit interesting. I wanted to show you guys this. I don't know if this means anything, but take a look at this price action right here. And what I mean by the volatility is something I wanted to show you guys. Let's go over to, let's do, am I on the maximum week? I am on the max week. Okay, so check out that volatility. And then something I kind of thought was interesting, if I pull up this chart right here, this is back in the .com bubble. I'm not saying it has exactly the same price action behavior, but what I mean is you can see the volatility pick up from here to here and then back down to here, and see how this chart was rallying. It rallied 1, 2, 3 weeks, and then it kind of fell into a little bit of resistance there, and then it kind of sold off. And I wouldn't say that the sell-off was terribly huge. However, the drawdown from the highs down to the lows was 39%. Now, I'm not suggesting the Qs are about to put in a negative 39% or a drawdown of 39%, but I'm saying that at some point, I would not be surprised if the Qs or any of the markets did pull back those types of percentages. Let me zoom in just a little bit here. So just to give you a perspective a little bit, right now the Q sold off into correction territory, negative 11.9%. So if we did ultimately see some sort of correction in here as far as bear market, it would put us at almost down 20%, and that would also be the low back here on 11.2, which was this candle right here, which is a prior breakout area. So maybe at some point it will be down there, but for now, I think you can continue being long the Qs, and like I said, just keep raising your stop loss up until it stops working. Let's go to the IWM, and this is going to be the final one that we're going to look at. IWM, there's also a trade setup in here, and this is the one I want to talk to you guys about the most. Is so like I was saying with the volatility, you still see that crazy volatile market. This is not looking like, I mean, sure, it may be healthy, maybe it's just normal consolidation, but look at the difference between this price action and this price action back here, right? There's a huge difference. And not just that, but we did break out, so it was understandable that we were going to rally up here a ways, but at a certain point we have to ask ourselves, at what prices are we willing to pay? Are we willing to go long here, hoping for higher prices, hoping for a breakout of, or even a back test or a test of 234.53. Time will tell, but let's go do this. Let's go down to the daily chart. And this is what I want to kind of show you guys, because this is still possible, although I would not leverage my entire account into this kind of a trade, but these are the kind of trades that I like. I like taking these rally trades. Not only do I like going long on the rally trades, but I also like to short at different levels, and I'm going to give you guys some levels to watch out for. And by that, let's go back to the weekly time frame. So the weekly time frame, you can see that I have levels up here. The support that I find for the IWM is at 222, 220.90, 215. The resistance I have for the IWM is 228.80, 231.50. Something I want to show you on the weekly time frame. On a weekly basis, or even a larger time frame, which I'm going to show you guys in a minute, on a weekly basis, you can say that, you know what, this is a downtrend from the highs. This is a downtrend. This is a bounce. At what price are we going to bounce up to? That is to remain seen. I mean, we don't know what's going to happen. But for me personally, I like to take these kind of trades. If you use longer term options, and I don't mean next week or the week after that, I mean the monthly contracts, if you use longer term options, and possibly look at some sort of a short trade setup in here. I'm going to let you guys know who are in the Discord. Every time I enter this kind of a trade, I'm going to let you know. And what I'm going to do now is I'm going to go to the monthly time frame, because this is where I saw the trade setup form. So on the monthly time frame, what I do see in here is I do see a reversal candle, and that's this candle right here. In fact, let me zoom in a little bit more so you guys can actually see what I'm talking about. So, you know, I'm not making this stuff up as we go. So what we notice is we do see a reversal candle in here. That's this candle right here. It's not necessarily a reversal candle, but I would say it's a possible, highly likely, in my opinion, a reversal candle on heavier than normal volume. And what I'm noticing right now is we are coming back in to possibly back test the highs, or one of these resistance areas that I had just previously given you guys. The thing I want to talk about is that intra-month, it is 100% possible to rally above 234. And this is why I say use longer term options, because for one, it's going to decay. For two, as the trade goes against you, it's going to really, really hurt. So it would be better to wait until you get as close to this 234.53 as possible, just like when the market is selling off, right? When the market is selling off and we're coming into a low down here, we don't want to, and we don't always have to front run that kind of a trade. But just like going down to the downside and the market bouncing, it's the same kind of trade setup trade idea. And so 234.53, what that would mean is that the stop loss would be at 234, let's say 234.60. But intra-month, the price could go all the way up to 235, 236, 240. and then it can fall back below. As long as the price doesn't close by the end of April above 234.53 and the price stays somehow comes back down below 234.53, that means that trade is still on. And that's why I said you really have to have patience. And I'm not suggesting anyone take that kind of a risk as far as a trade setup goes. In my opinion, it's better to wait for the actual reversal trend change. But these, like I said, these are the kind of trades that I like. I am looking at this like this is a down move. We're having some sort of bounce in here. Maybe it'll go up to the a higher Fibonacci number than the 50%. Maybe it's going to rally on up here, and then maybe it will roll over. We don't know if it is. If you want to be a little bit more conservative, a better way to trade this setup is wait for the actual price to roll over and make a new lower low and then take that trade to the downside. The only problem with doing that is that I don't personally take those kinds of trades. I don't wait for it to get all the way down to support and then possibly break support at 100% Fibonacci retracement from this level and then go long at that point hoping for a bounce. I would rather wait for the bounce and then take a long trade out of that bounce once I see some sort of resumption off that level. But just like the price comes all the way down here, it's going to be pretty extended to the downside. And so taking a short trade at support is not a very smart decision. So for me, I would rather do these bounce plays. That's the trade setup I have for you guys. Let me show you something really quick on the monthly chart. If I go back to the monthly chart, so like I was saying, you do see that reversal candle in there. Something I wanted to show you guys as an example of this is here's the Qs. And we see the same kind of behavior, right? We already see a monthly reversal candle in January, and this is the reversal candle I'm talking about. Actually, you have two in a row. This was a reversal candle, and of course, this is another reversal candle. So the thing is on the second reversal candle, this gravestone doji or whatever candle you want to call that, the price action's bearish, where it rallies all the way up to 338 and then sells back off below this level, right? So here's something. The example is, clearly we can see intra-month it can go above there and then come back down. And so what I'm saying is, so if this is our current reversal candle, if this first candle is our current reversal candle and we wait, the IWM can rally up here and then come back down below and close below on the monthly basis. And then the result of this trade setup would have been a downside trade of around 10% if you were going to hold that all the way down to support of $300, which I believe that we did. That's it for this video. Let me know what you guys think in the comment section. Like I said, this is not financial advice. So we all have our risk tolerances. Some of us can handle certain kinds of risk. So it's important to understand your own portfolio and what you can or cannot handle. And that's all for this video. We will see you guys in the next video.